anyways, we're going to go ahead and get started. So as you guys know, coming into every single trading week, we always look at the economic calendar. So with the information being provided, we can see Monday, there was no news. Now, even though, like I said, there was an expansion, it was difficult to navigate. So although price did offer a bunch of points or a bunch of handles, it was a high resistance run that wasn't clean or clear, which is why we opted out today. And in the previous pre-recorded lecture, I said that Monday is likely going to be a little bit more difficult to navigate, so we need to see how that plays out to get more information. So whenever you have a Monday that has no news whatsoever, and then every day following has news, like you can see right here, typically Monday will be lackluster. Now tomorrow, Tuesday, we have 10 a.m. Dolch job openings. Now, as you guys know, 10 a.m. news typically is a low probability news event. So while there might be something there to do, don't come into the session with high expectations, because majority of the opportunity will form Thursday and Friday. And the reason majority of the opportunity will form Thursday and Friday is because Wednesday we have CPI and Thursday and Friday are the days after CPI. CPI, I think I've said this before, is the largest news event of the month and gives a lot of clarity to the month. And whenever CPI falls on a Wednesday, if you have a cracking correlation that forms before CPI is released on either Monday or Tuesday, typically CPIs that release on Wednesday will follow in tune with that cracking correlation and continue as an expansion. So that is something to look out for. And then Thursday, we have 8:30 a.m. news, so this will probably be a very high probability day. And then Friday, we have 10 a.m. news, which I wouldn't say it's low probability or high probability, it's kind of in the middle. So high or low of the week, we could see that form on either Wednesday or Thursday. And now looking at the chart, so as you guys know, we had this monthly cycle sequential SMT right here, which is what caused price to expand lower thus far. Now, I'm not entirely bearish here all the way. I still definitely think that we could come run these highs in a later date, way out in the future. But in order for price to turn, we need something equal to or greater than this SMT right here. And if that plays out, if that forms, then we can expect to use these highs right here as a draw on liquidity. So there's, again, still nothing really tipping its hand. There's no higher time frame levels. There's no higher time frame sequential SMT except this right here. So until something equal to or greater than forms with this, then we can expect the same price action that we are currently seeing. But something to keep in mind is this 4-hour TPD right here. So this TPD can give us a lot of insight. So if the NASDAQ, trades below this low, while the S&P creates a failure swing, then that could call for price to return back within the range. Only if that sequential SMT is there, because this is the previous day's low. So if all of the assets trade under this low, then like I said, we could expect this same price action. But if this TPD serves as a reversal TPD and not a continuation TPD, then that is the only thing or the only reason for price to return within the range. So that's the only factor that really catches my eye right now. But again, majority of the opportunity and the clarity will come later within the week. So don't blow or don't use all of your trades up this week or use all of your capital. Save it for whenever it's high probability. But that's really all for insights, so now we can do some Q&A. The only way to know what a TPD will serve as is to look for a cycle, correct? Yes. How to tell if it's a reversal or continuation TPD? The way to know if it's a continuation or reversal TPD is if you have well-established narrative. That's the only way. Well, there's another way, but we'll get into that later. But that is the big way. So, for example, this weekly TPD that formed, this weekly TPD was used as actually, we can go back to the one that we actually called out because I don't want to seem like hindsight specialists. But you guys know this weekly TPD that we had outlined right here. This weekly TPD was used as a continuation TPD. Why was it used as a continuation TPD? Because the lows we had outlined, we wanted to see price draw to these lows. So our narrative was bearish, and then a TPD formed after price had breached the 50%, the 50% of the immediate range. So from this swing high to this swing low, and why are you taking this swing high and this swing low? Because this is the highest swing high and the lowest swing low in the entire price run. And this is also where we wanted to see price draw towards. So this was our target. Now say for example, we were to take a higher range like this for a higher time frame. We can see this weekly TPD right here. It served as a continuation TPD because price went towards these lows and then broke through the 50%, and then price used that as continuation. But you need to have a well-defined narrative to understand continuation versus reversal TPDs. And that's not to get confused with the advanced premium and discount sequence because they're used in two different ways. So if something tips its hand, you will target the previous SMT highs. We talk about targets later. Yes. But I don't believe this is the big crash that everybody thinks it is. I don't think it's time for that yet. If anything, I see this as smart money, buying at a lower price so they can sell it at a higher price whenever the real crash does come. But we'll see. Yeah, if we see a weekly TPD forms in the near future, I'm buying everything. Like say for example, if this candle closes as a weekly TPD, then these highs are gonna get destroyed. Weekly TPDs are extremely powerful if they're used for reversals. How do you look at higher time frame key levels that are this far out on the left side of the curve, where indices are at now? I don't believe the market actually looks back this far. The market really only looks back the previous 60 days. So this is all new territory for the market, in a sense. Now, using the way left side of the chart as targets, yes, but using it to pinpoint actual places for reversals like we have in the past of, okay, it should go to this gap and then it should do this, or it should go here and then do this. You can't really do that for data that's all the way, months and months and months ago. I mean, sure, after the run happens, you can go out there and, be like, oh, it was this candle right here that caused price to jump. Like, you can do that after it happens, but actually seeing it in real time and calling it, it's just... September's lows. The devil's mark. Right now, we're just waiting for price to tip its hand. Really, in either direction. Now, preferably, best case scenario is it does this, but if all assets run out, because you don't want to be in the way of a big run, or in the sense, in age-old adage, try to catch a falling knife. You don't want to do that. You need to wait until something is equal to or greater than what caused the run. And that's why weighted probabilities is so important. So until something, like I said, is greater or equal to than the run, or the thing that caused the initial run, we can just expect price to continue going in the same direction. Do you consider new week opening gaps from that long ago? No. Do we get automatically renewed at the end of the month? Yes. The assistants got all that worked out, so it'll be March 31st, I think. Somewhere around there. TPD question: if candle 3 opening price is in sync between two assets of a triad, both are higher or both are lower than the close of candle 1, but the third asset has a third at the same price as the C1 close, do you still count that as a TPD? There are some scenarios where it pans out and it works, but this is with anything that's, low probability like that. Because a lot of you guys ask like very niche questions and things like that. Just look for a lower time frame cracking correlation. If it works, 90% of the time it's because there was a lower time frame cracking correlation within there. So if you see something that's low probability or just a very, odd thing tipping its hand that usually doesn't form very often, just look for a lower time frame cracking correlation to support the idea. That'll save you a lot of headache. On Forex, you recommend starting the New York session at 7 a.m. or 7:30 a.m., knowing the true open is at 7:30 a.m. Yeah, with Forex, it's not a bad idea to start a little bit later. Not later, I mean a little bit earlier. Try longing today. Care to look at it over? It was around 12 p.m. We had 90-minute confirmed by 5-minute TPD, along with daily cycle and 1-hour TPD. I believe it was this. Nice. As soon as I go to look at something, it starts messing up. a.m. It's 12. And then so you're talking about here, why this long didn't work. So I'm assuming you longed about here, somewhere around there. Yeah, with the 5-minute TPD entry. So I want you to take a look at this. Do you see it? So the run for the downside had already began. Plus, with what we were saying, with what you know now about weighted probabilities, with what I just described there, the only reason why these concepts fail is because the user is looking at it in the wrong side or the wrong perspective. That's the only reason why these concepts fail. So the reason why it failed right here is because the downside run had already begun. So if anything, price used this as SMT market structure shift. We'll see if we get this SMT. Came a little bit earlier than expected. Do you recommend using the classic premium discount as well, or only the advanced? Use the classic for continuation TPDs. Use the advanced premium and discount sequence whenever you're looking for actual continuations of sequential SMTs. For example, if a weekly cycle of sequential SMT happens and price expands, then you would use the previous day's range to work for, let's say Monday and Tuesday have a bullish weekly cycle sequential SMT. Then you would look at Tuesday's range. If it expanded already, look at Tuesday's range and look for at least one of the assets to trade within a discount, preferably within a gap. And then look for a continuation higher. Why did NQ take the low? Or why is NQ going to take the low sooner? NQ right now we can see is weaker. Why? This is a TPD right here. Even though the color of this candle means absolutely nothing, or the color of this candle is up close on both assets, this is still a what? A TPD. NASDAQ had the lower open, so that's why it's more aggressive to run out this low. If this TPD is a reversal TPD to cause price to return within the range, the reason why the S&P would create a failure swing is because it's a higher open right here compared to this close. Show the reversion level on the S&P. We'll look at more so this entire candle, but we'll see. For those that have heard me talk about this before. I swear, sometimes I hide it in plain sight. But anyways, and no, that's not a signal, remember. Wait. Be patient. Majority of your learning will come from observing and then seeing it actually happen, not from taking a trade. Because whenever you take a trade, and if any of you have taken a trade just because I called a direction, like immediately as soon as the live stream got over with, just bam, entered. Regardless of the outcome of that trade, the learning experience isn't going to be as good because you're going to have an emotional attachment to the outcome. That's why it's important to wait. Are there times during the day when it's really not advisable to trade? Even if there is an SMT, yes, typically the lunch hour. So from about 11:30 to 1 o'clock, that's when things are more difficult. Make sure I got everything answered. Yeah. But we're gonna go ahead and wrap this one up here. So I will speak with you all tomorrow. Can you review the daily cycle sequential SMT with Asia and London? Look at this real quick. Oh, I'm talking about this right here. Yeah. Very rarely will this ever form high or low of the day, but it is a possibility. And yeah, they're trying to take me out. Can you guys hear me good now? Anytime I try to review something, they don't want me to. But very rarely will this ever form high or low of the day. The only time you ever see this work is for continuations, specifically within a gap. And in this instance, it was the new week opening gap. But with that being said, hopefully y'all found this one insightful. I will speak with you all again in tomorrow night's pre-recorded lecture. Again, remember, CPI will be the thing that offers a lot of clarity. So don't try to push too hard tomorrow, and definitely don't try to trade ahead of CPI. Because as you guys know, in the past with non-farm payroll, CPI, even if we get it right in the direction, there's still a possibility of it running you out or shaking you out of the market. So just don't even open yourself up to that risk. But with that being said, good luck and good trading.